Norwegian Cruise Line has just threatened bankruptcy. Is it time to buy? Time to sell? Or do we hold? All right, everybody. CNBC put out an article today about Norwegian Cruise Line. This says it sees substantial doubt about its future, warns of possible bankruptcy as it seeks to raise $2 billion. The key points are Norwegian Cruise Line said there's a substantial doubt about its ability to continue as a going concern as the coronavirus pandemic wreaks havoc on the industry. The company also announced it expects to report a loss on the quarter ended March 31st and on the year. We'll see that on the 14th next, I believe, Thursday, when the company releases its earnings. Separately, the company announced Tuesday morning that El Caderon, a private equity fund, invested $4 million in NCL Corporation, a subsidiary of Norwegian. We'll read a little bit more into this here soon. There are a few downsides and stipulations to this $400 million investment into NCL. Okay, let's look at the company's financial here on Yahoo Finance. Please note everything is in thousands, so it may look like 2.8 million. That's closer to 2.8 billion. So let's begin with the revenue. We don't really care right now about the revenue, in my opinion, being that we're going through a pandemic and these revenues will not sustain. We're looking more at the cost to keep the company afloat and how much they have so we can learn a little bit more about how long they can actually sustain. We look here, looks like they have the cost of revenue to be able to sell products, keep ships afloat, things of that nature, is about 3.6 billion. But there's also this total operating expense of about 1.6 billion. These will go down. The ships aren't sailing, they aren't burning fuel, they'll lay off some people. But we can look and we can see the neighborhood of how much it costs for Norwegian Cruise Lines to stay running every year is, call it $5 billion at the least. That's a lot. So they have some other tricks up their sleeve. We're looking here right now at their balance sheet, how much cash they have on hand. Right now, they have about $252 million, give or take, in cash. That's not how much it takes to keep the company afloat. Total assets, we're at about 730. These are things they can get rid of, some stuff they can burn, other ways to stay afloat. But then they also have property. These are their boats, their ships, their docks, things of that nature. If we see these start to go down and the company sells some of these off in their earnings report on Thursday, that's not a good sign. But their goal to get a couple $1 billion will, in theory, keep them afloat for 6 months, give or take. But again, remember, they will be able to lower their expenses quite drastically during these times. Well, at least that's what we hope. Well, there's no need to look at news articles. When Norwegian Cruise Lines has press releases that you can read straight from their website. Let's go through some key details here to show you what they're doing to try to get through Corona, to figure out if they could possibly make it, if it's a time to buy, or if they are going to have to file bankruptcy. Well, let's look. Right now, they can't book anything. That's not good. That's no money in. That's pretty much what we don't want when we buy something. But they have an action plan laid out that we can read about here. Well, right now, they have reduced operating expenses. You can read them right here if you want, or I'll link the article below in the description. We can see here that through these reduced operating expenses, they are going to lower their operating costs by 70 to 110 million per month. Let's just round it. Let's just say about 90 million on average. That's always good. Reduced capital expenses. Well, we also have 550 million in capital expenses. This is great. They're going to do some reduction of building new ships and updating ships. That's just fine for right now. There's also improved debt profiles. This means they won't have to pay some things. Right now we have 385 million in deferred payments, and then there's also 230 million right here in a loan that has been extended for 1 year. That's fantastic. All of this added together is a little over $1 billion. And that's just in loan deferments. We also have up here what I was talking about earlier, the reduced operating expenses, 90 million per year or 90 million per month. If this continues on for a year, that's also a little over $1 billion. That brings the $5 billion cost of business down to 3. That's much more tolerable. But how will that work? How will the outlook look? Well, it says here, we read a little earlier by CNBC, that they do expect to report a net loss. That's not great, but we can expect that when they can't have business. But how long can they survive? Can they weather the storm? Let's do some math. Rolling back to their financials really quick, we do see that they have somewhere around $730,000 that they can use to pay bills. Back to the CNBC, they're hoping to raise about $2 billion, but there are some stipulations. I said I'd talk about that, and we'll get there here with this $400 million given by El Cateron. And back to this article that Norwegian Cruise Line has put out themselves, it looks like they'll have, hopefully, about $2.7 billion in cash freed up to be able to weather this storm. Well, we said earlier as well, if we cruise back over to Yahoo, that their cost of business was somewhere around $5 billion prior per year. But they've lowered this by about $2 billion, so that leaves us somewhere about $3 billion to weather, to keep business afloat for a year. That means that Norwegian Cruise Lines, with this new cash that they're hopefully going to fund, will have about 1 year's worth of cash on hand to keep things moving without incurring any extra debt. But there's still options beyond that. So if we look further at the new Norwegian Cruise Line's press release they put out recent, it says here on their balance sheet that they opened up a new line of credit of $675 million alongside their already existing $875 million worth of revolving credit. This leads to $1.5 billion in revolving credit that they're able to access whenever they need. It says here, we'll learn a little bit more than this next Thursday when their earnings report comes out, that at March 31st, 2020, their cash equivalents were all the way up to $1.4 billion. This is quite a growth over this $730 million we saw in December at their last earnings report. So that's fantastic. On top of that, they estimate here in this paragraph that their total cash burn during this pandemic will only be $110 to $150 per month. This makes it look more and more like Norwegian Cruise Lines will be able to weather the storm, so long as things come back soon enough. But bankruptcy is still an option. So what do you say we talk about some different options that may occur, some different possibilities that may occur as coronavirus continues and as Norwegian figures out what will happen with it? Well, we have a few options. One of the first is right here, possible bankruptcy. That's one of the worst options that could happen. Having a company go under, things get liquidated, companies get bought out at not market rates, things of that nature, is never good for an investment, needless to say. Another option is that things make a turn, the country reopens, Norwegian Cruise Line starts getting ships going again, and the stock could possibly race up. The final option is that Norwegian could get bought out. We never know, but when companies get in rough times, other companies can swoop in to fill the gap. You could have Carnival, Royal Caribbean, Virgin, Princess, many of the others, maybe even a company that doesn't have cruises right now, swoop in, use some of the cash they have on hand, some of the lines of credit that they have possible, and they could own it. But let's also, finally, last but not least, let's look at Norwegian Cruise Lines, where we're at now, when we've been, and where we're going. Well, let's start with before all of this happened. January 31st, $53 a share. That's great. Looks like if we look at 1 year, they had gone down a little bit, but they were holding fairly steady. Over the 5 years as well, they've held pretty steady. They've had some dips throughout the years and with the market, but overall, it's been a good long-term stock that holds itself. But again, let's go back down to 6 months here. End of January, we were somewhere around $55 a share. Right now, we're around 11, a little more. We had an over 20% drop today, by the way, 22% with that news article that came out about possible bankruptcy. So we're down about 80%. That means if you buy a stock today, just one share at 11 bucks, and things magically tomorrow turn back to where they were, possibly more like years in the future, you would make a return on your investment of 400%. That's amazing. Where else can you turn $11 into $55? But there's also some downsides. We can see here, they were lower. March 18th was their low, I do believe, at $7.77 a share. We hit another low here of about $8.45. But then things started to pick up. The nation looked like it was going to reopen, but fears of bankruptcy drove us down to $11. Does that mean they could possibly go back down to $8 a share? Down to even $7 a share? 5? 4? Who knows how low we'll go? Who knows if Norwegian Cruise Lines will even make it out of this storm? Is it worth buying? Is it worth selling? If you have some shares now, do you hold? Well, that's a decision for you to make. Leave your comment below, and thanks for watching.